very distinguished panel to get a bit granular on the whole DCM and Sukuk development. They're all market practitioners of one form or another, both from the issuance and from the intermediary side. So we've heard a lot from regulators, we've heard a lot from policymakers, we've heard a few bits and pieces from issuers, but we haven't really had a lot of granularity on the sort of intermediary side. So that's what we're going to cover here. There has been one change to the panel, and that is that we're now joined from HSBC by Mohammed Farhan. And Mohammed is Head of Islamic Finance and Sukuk for HSBC in Saudi Arabia. I'm not going to read it. He's basically the go-to man for Sukuk at HSBC, which is the leading Sukuk bank in the kingdom. Would you? I know you'd say that, but I think on the deal tables you're still number one. But he's been involved in some of the issues, such as Saudi bin Laden, Al-Marai, Savola, and obviously the big names of GACA and SEC. So, Mohammed, welcome. Very pleased to have you here.
Thank you.
I'm going to start with you, because you were last on, so you can have the first question. Is there ever going to be a sovereign Sukuk?
Thank you, Richard. We sincerely believe that a sovereign Sukuk would certainly help. We would like to see a sovereign Sukuk, but should we recommend that? We believe not. The GACA Sukuk was as close to the sovereign Sukuk that the market need to develop. Sovereign Sukuk would help accelerate the pace of development in the market. But we believe the issuance of a Sukuk should be based on the fundamentals of the issuer, the fundamental requirements of the issuer. The Saudi government at the moment, we all agree, does not need to borrow. So we would not unnecessarily out of marketplace try to push for that.
Iftikhar, as another banker, are you on side with Mohammed on this one? Do you think that there will be, should be, might be, could be a pure sovereign Sukuk, either in riyals or in dollars or something else?
We need to. I have a certain different view than Mohammed. I think you need to look at two different markets. One is the dollar market, and whether we need a Saudi sovereign Sukuk on the dollar side or not. And probably the benefits are not huge for the Saudi companies. There are limited amount of companies who can go out and issue in the international markets. And those companies are already doing that. So I think the benefits are not huge. But in the local market, in the local currency, we believe that certainly there is room for the government to come in and have regular issuances to create a curve in the local market and allow other issuers to come in and issue at the back of that. And obviously the ratings come into play, a local rating agency, whether you need that or not. But on the sovereign Sukuk, I think the local currency Sukuk issuance would definitely help the market to kickstart that market.
What's in it for the government? The numbers thrown around yesterday were debt to GDP of 3.2%, which is effectively nothing, I think somebody said. Reserves, SAMA and elsewhere, 600 billion plus, although those are not audited figures. Why? If you had to go and talk to a senior Saudi policymaker and say, I think you should issue a Sukuk, Saudi Riyal or whatever, what reason would you give them for doing that?
I think for reduction of borrowing cost in the general market, and that's I think government's job to facilitate its corporate sector to come out and have those issuances. Unless and until the government steps in, nobody else has the capacity and the willingness to do that. Now, looking at obviously there is no requirement of funding right now. But that can change very, very quickly. You look at the oil price, if it drops substantially, you can have some funding requirements. So the best time to borrow is when you don't need the money. Otherwise, if you have not created that curve and you start issuing when you actually actually in need, then you pay up more than what you effectively pay up if you have regular issuances throughout the curve. So I think that's an argument in that case.
Khalid, I mean, you work for Ma'aden, one of the crown jewels of the Saudi economy, and yet you haven't issued a sukuk, do you, or a bond? I mean, I slightly using those two terms interchangeably, although I do know they're not. Do you, from an issuer's point of view, two questions. First question, would you feel it to be useful for you if there was a sovereign yield curve, either in reals or dollars? And secondly, is that DCM structure something that Ma'aden is actively looking at using in the next, couple of years?
Yeah, if I can just add to what my colleagues have just established, I don't see any pressing needs for the Saudi government to issue bonds. But having the idea is going to be a very good idea, establishing a yield curve for the whole bond market. And it's going to be very helpful if it was a different tenor of years, 10 years, 20 years, 15 years. And in addition to that, if you think in practical, there is no sovereign issues has been made, but we've got GACA. And GACA was issued last year, 15 billion riyal, and that was practically sovereign bonds because it was guaranteed by Ministry of Finance. And that was good approach, especially that SAMA have opened the window for the repo for this, which really enhanced a lot the liquidity and the trading of those bonds. In relation to Ma'aden, it's something that we're thinking of, and if we were doing it, we are going to do it on a project financing basis, and we will think about it of doing it as part of the whole financing structure from the outset. So it's not something that is going to be doing it for the sake of doing it. It's having it as a good idea of diversification of our source of funding. But if we do to choose to do it, and we're thinking seriously about doing it, it's going to be part of the whole financing structure and our project financing.
When I was talking to Paul earlier, I mean, he had two very clear reasons: tenor and cost. Do you share those reasons for as the primary reasons to issue a debt security, that you would get lower cost of finance, and you could, especially when you're looking at large projects, or mega projects like you do, that you would be able to extend the tenor beyond that which you could get from the banks?
As long as the bank market, as attractive as the way it is, with the amount of liquidity with the banks, I think it will still more attractive. And if you think about all the bonds that has been issued so far, ultimately they end up with the banks one way or the other.
Yes, they do. Yeah.
If it's not in corporate banks, it will end up with treasury. So ultimately, most of it is coming really from banks, and most of it is private placement. So unless you have a really active secondary market, then the bank lending is going to be dominating the market. Now, we have seen deals, and I think because of the banks are the most lending, even for bonds, we have seen deals that are having difficulty in selling long tenor bonds. It's not the case when you do project financing with certain securities. In pricing, I don't see any big difference. I think the bank market's still more attractive. It's straightforward, and people are used to it. Unless that formula change, I think the banking lending is going to be the leader of the project financing part.
Okay, so a bit of a bond market bear there. Yasser, you're another corporate, slightly different type of corporate. It may be just an idea to give us a thumbnail of Manafea, what you do, but are you a bond market bull or a bond market bear, like Khalid is?
Well, actually, I'm a bear market looker at the bond market, and that's not for Saudi in particular, but that's globally, where investors are shifting from the debt market into equities, and that's a cyclical thing. Let me go back to your questions whether we should see a sovereign bond, a sovereign debt. I started my career at NCB as a capital market trader, and I remember the old good days with the SGDBs and the active Saudi bonds and markets and repo, etc. Those old good days are gone. And I think we will see a sovereign bond debt coming back into the market. It's essential. It's a monetary tool. It's a monetary tool that I think the ministry has done a big mistake by wiping out, by killing that very effective and substantial tool. It's also important to set up a benchmark, a yield curve, a term structure. You can't have a secondary market without your government establishing a yield curve, a term structure, in order to price any corporate bonds. So
but I mean, aren't
crucial.
GACA and SEC just basically the government in other clothing? I mean, you know, wouldn't they do? I mean, if you price off GACA or you price off SEC, is that not a viable substitute?
See, it's very crucial for the government to leverage their credit rating. The government is such as like any other corporate. They have to manage their liquidity, their wealth, etc. It's a huge, substantial investment reserves in international bonds, and a time were really rough and tough in the past couple of years ago, and I'm sure there were a massive haircut that took place previously. But again, the sovereign market, debt market in Saudi is essential, and now we're feeling again the necessity of having this tool back into the market to activate the secondary market in Saudi.
They were good old days for bond traders, but maybe not good old days for the government. Anyway, never mind. That's not our. We're private sector people here. We can talk about that. Stuart, Yasser just used words that I'm sure will be music to your ears, and we can now move the conversation on to that, which is leveraging the rating. We heard yesterday, I've mentioned it this morning, but I'll mention it again, you know, two polarically different views on what sort of ratings are needed. It's not difficult for me to guess where you come down on that, but let's talk to that and talk to what S&P are doing in the region and here to increase the number of ratings, the transparency of ratings, and why that might be beneficial to the development of both the primary and the secondary market for DCM products in Saudi.
Okay, thanks. I mean, I think the good news is that there's a huge amount of interest in the region, and particularly in Saudi, as to what the role of ratings can be. I think this region has been relatively immune from, if you like, some of the North American and European fallout from the global financial crisis. And in fact, we've found that, for example, downgrades of the US and France have almost been beneficial in communicating that we are truly impartial and independent, and it is a level playing field on a global rating scale. Particularly to Saudi, I mean, I think what gives a good indication is that despite a relatively underdeveloped ratings market, as we've heard over the last 2 days, it's our second largest market in the region after the UAE in terms of number of ratings. It's very light on corporates, as we all understand, but certainly between the banks, the GREs, the insurers, it is strong. And I think testament to the interest of ratings, a month ago we held a forum around capital markets and the role of ratings here in Riyadh, sponsored by the Capital Market Authority, the Institute of Bankers, and supported by the Gulf Bond Sukuk Association. We had over 200 attendees turn up for that forum, and there was very good dialogue during the morning, and I think that was just a great insight into how topical this is. Many of you in the room may be aware that the Capital Market Authority has been developing regulations for rating agencies. It was alluded to yesterday by the chairman of the CMA. That's been an exercise for which there's been consultation happening, certainly with the industry and the major rating agencies over the past 18 months. The draft regulations were published in early December. There were 2 months period for public and industry comment. We certainly provided our comments, and And ostensibly, these regulations require, to an extent, licensing, but it's all part of a broader agenda, we think, to allow the development of a capital market between not just CMA, but SAMA, the MOF. Ostensibly, how do they get to a yield curve, more activity? Interestingly, the regulations allow foreign rating agencies to come into Saudi as wholly owned branches, which there are still many clarifications required. They're draft regulations, but they're expecting to be finalized this year, we believe. But I think also, the fact that they're if you like, asking the foreign rating agencies to come in on that basis indicates the seriousness of the agenda and the extent to which they believe that we and our global peers can come in and contribute to this development.
I'm going to be slightly provocative here, but I'm going to ask the audience a question. How many of you prefer the idea of local or regional rating agencies over the global ones? If you prefer local, put your hands up. 1, 2, 3, 4, 5. And if you prefer the other way round, so if you prefer global over local, okay, so it's that seemed to go a bit towards the global. Mohammed, let's have your thoughts on that from an investment banking point of view, from an intermediary point of view. Do you feel more comfortable when you have clients that are compliant with global ratings procedure, or would you be happy taking it to investors something that was just rated on a local level?
Richard, one of the things we truly believe is that most of the things that needs to be done, they should be done because of the right requirements, because of the right basics. So coming back to the question of the government issuance, again, we believe the government should issue when they need the funds and not because they would like to do X, Y, and Z. Similarly, for the ratings, we truly believe that the global standards should be applied, taking into account the local intricacies. Yes, you will need to, the analysts which will be covering the ratings for the local companies would need to get local business knowledge and understanding of how the economy functions and the different linkages between the sectors and the different players in the economy. And to the credit of the global rating agency that we have interacted with, and for the ratings which are available in the market for the Saudi corporates and financial institutions, we are very confident and very glad with the depth of understanding which these analysts have developed over the years of how these credits work and where they draw their strength from, both from a business standpoint of view and both from a support standpoint of view. So we would certainly believe that the global standards adopting and with the local understanding is the best way forward. You try and create a local standard and then you have a mismatch because ultimately the world is moving towards a more global nature, and Saudi companies for the moment don't need international, for most of them, to tap into the international debt capital markets because you have a very liquid, buoyant, local debt capital markets. But you should prepare yourself for the times when you need to go out and compete with the rest of the world.
But let's, you know, and actually I'm going to fire this back at Stuart here in a slightly provocative way again. The presentation we had from Chagamas, one of the major global issuers of Sukuk, certainly one of the largest issuers in Malaysia. They are rated by RAM, ratings agents in Malaysia. They're very happy with their domestic rating. Yep. They don't see the need to have an international rating. They, you know, their assets, their liability, everything is local. They issue in ringgit. So why should you have an international rating if you've got a Saudi Riyal issue, a Saudi company issuing $50 million, $100 million worth of Riyals in the local market, which will be bought and held by local investors?
Sure.
Why should S&P or the other globals be required to rate that? Surely it's an excess cost and burden on those companies.
Malaysia is a particularly, very successful and vibrant market. I was over there earlier this year at an S&P forum, and Kagamas were part of that. And what struck me about that particular forum, of 200 in the room, I guess 70% were institutional investors. And that's the most important difference, is that the ASEAN institutional investor base, they have developed pension funds, the insurance companies, and independent asset managers. It's a dramatically different, if you like, profile of investor base, and that's critical. I mean, the other thing that really kick-started the Malaysian market was the regulatory requirement for all sukuk to be rated. And that's been very successful. Generally, we don't necessarily advocate that as a rating agency. We believe it should be sort of a free market.
Why does that make a difference? The first point, so you have a much deeper or more developed institutional investor base in Malaysia and East Asia. Why does that make a difference to whether there should be local or global ratings?
Well, in the interest of disclosure, I mean, we are a shareholder of RAM. And within Asia, well, globally, we do have quite a strong affiliate strategy. So as a minority shareholder of RAM, we do have some insight into what's going on there.
No wonder they're so good.
It's and equally in other parts of that region. The fact is, you know, it is very much sort of a case of the market view prevailing, you know, and.
But I mean, is what you're saying that the institutional investor base have a better knowledge than the retail investor base, and therefore
it's a very strong domestic market. Yeah. But it's also a market where you know, the regulator has intervened very strongly in structuring that market.
Right.
You know, for example, and we as an international firm, we operate predominantly under a global scale. Interestingly, we do have a regional rating scale. You know, for all of our public ratings, we do advise that the regional rating, which really pulls apart the single Bs, to give more granularity. But 95% of rated entities in this region choose not to publish that because they're fundamentally comfortable with the global scale rating. I mean, we will observe this market. I mean, this is the long-term going to be the most important market, certainly for us. We're a majority shareholder of CRISIL, which is India's largest local rating agency. Yeah. They operate almost what I'd call sort of a middle market ratings light approach. But of course, the biggest part of their business is our bank loan ratings. Right. You know, they're not for fixed income. They go and obtain a rating from CRISIL, and they work around the banks. And really, if you like, look for the best deal with the independent rating. They don't rely on bank credit analysis.
Khalid, what's your take on ratings? I mean, Marden is an international Saudi, but it's, you know, well connected internationally. You would be a candidate for an international rating, I would say. Do you have any opinion on whether you'd prefer a local or an international rating of the firm, which would be more indicative of the reality?
If you think about credit in the kingdom, it has come a long way in the past decade. Both banks and all lending institutions are doing more thoughtful, consider credit, to the contrary of the name lending that used to happen in the past. So the credit education has already happened. In terms of having rating agency, local or international, I think there is a place for both. I think making a joint venture within the kingdom between those international credit agency and with some of the local people here, I think is going to add sure value to the kingdom. There are certain companies who could be viewed differently by a local rating agency from an international that could even go beyond the sovereign credit. So that's something that I think is going to help for the debt capital market here, and I think there is no strong view in my own whether have it one way or the other.
Iftikhar, do you come down on one side or the other, or do you say that both is the way?
I think these are not mutually exclusive things for us. We are looking at a dollar issuance, so you're looking at an international rating agency to rate your issuance. For a local currency issuance, you can have a local rating agency which can be a partner with S&P, Fitch, Moody's, doesn't make any difference. So they apply the global standards, but they are issuing you a rating in relation to a Saudi Riyal issuance. So in a Saudi Riyal issuance, the government of Saudi Arabia goes up from AA- to AAA, and everything else then bumps up in that range. What our estimate is, there's a host of Saudi companies which are in the range of BB right now because of their size constraints. So they will automatically bump up into the investment grade arena in Saudi Riyal only. Obviously, when they are going international, they will have to comply with the international rating agencies. But local issuances can definitely benefit from a local presence of a local rating agency and a local scale.
I'm just thinking, if you're developing the Saudi Riyal bond market from a monetary policy point of view, I mean that's the one you want from a government point of view. Yes. To take Mohammed's point, why raise money? Well, why go? Don't kick out a $2 billion dollar issue or whatever, but go for a series of an issuance program within the country in Saudi Riyal, establish a real curve, monetary policy management, reserve management, all that sort of stuff. Then, as you say, it would seem logical that a local rating agency would support that. As well as, if not better, than an international agency. Yes. But there will still be a very clear role for the global agency, which is when you're looking for funding outside of the country and you would need that. Does that make sense to you, Yasser, or am I talking complete rubbish?
Well, absolutely.
Ooh. Yeah.
Global. No question asked. The thing is, the question for the rating agencies, the preference, is the right of the investors. It's not the issuers or the borrowers. The rating agencies, the main objective is to protect the lenders, for them to assess truly the risk. So for the investors to compare international standards with a very wealth heritage and experience with local rating agencies is, I'm afraid that would be a big mistake and misleading and not serving the purpose. However, rating agencies have learned their lesson very hard during the financial crisis, and they got blamed, they got shafted big time. And they're making their way through. And they must strike the balance between the culture, understanding the Saudi market or the GCC market vis-a-vis the international market. I'm not saying, I'm not claiming that rating agencies should give reconciliations or settle. It's for them to really understand how the market behaves, the culture, etc. What are remember, it's all about risk management. So understanding the risk and the measurements, the quantifying the risk is very crucial and essential for the international rating agencies. So they have to go through a learning curve to really serve the market better. With regards to local rating agencies, I believe that can be served by consultants, by the Big Four, for instance. That will be a supporting thing. Corporate governance enhancement. But again, the international rating agencies is a must. And I mean, this is like comparing Harvard Business School to a local business school here, just a beginner local school.
Yeah. Okay, so good. I love this. We've got divided opinions. That's excellent. Do you want to come in and say just quickly before I open it up to the audience?
I think just to pick up on that, I think one of the best things that happened in this market regionally was the Majid Al Futtaim rating. I mean, it never started off as a Sukuk program, but it was a long 3-year process. But that as a benchmark and milestone for private groups is critically important. I mean, we're involved with a number of confidential ratings, which is unfortunately something we can't publicize. But you know what you'll see are the public ratings we have. But we also have a concept known as confidential ratings, sure, which are just simply between us and the company. And we have a number of them in place with family groups, and they're not necessarily just for fundraising later this year, next year. There's a wide range of, if you like, reasons for doing it around corporate governance, measuring the performance of professional management, setting themselves up for a number of funding options, monetizing family wealth. And in fact, we've seen interest from private equity who've asked corporates to put in place a rating process. So if you like, it's another pillar along with an audit, clean audit history. But I think, yeah, in the Kingdom and elsewhere in the GCC, that Majid Al Futtaim process, and the emphasis is on process, not just the Sukuk, which was very successful, but I think that really opened Pandora's box and has either willingly or forced slightly many other very large regional private groups to consider how they move down this path.
Interesting. I mean, we could. Well, I think you say you had a whole morning on it. Unfortunately, we don't have the luxury of that. I have another couple of topics, particularly liquidity and all that stuff, but I want to open it up now to the audience. Right, gentleman in the front there. We'll start with you, then you, sir. And it's gentleman there. So we'll go. Excellent. So, number one, there's another. There's a gentleman here.
Munif Al-Harbi, Gulf Orbit. The biggest bankruptcy in the history, Lehman Brothers. If you see 2 hours before a twin bankruptcy and ask any rating agency, it was AAA. So even European Union is trying to have European rating agency. I do believe that if we have regional rating agency matching the international standard, will empower regional rating agency. And also we have in GCC, I think the economy in GCC is booming. We need a rating agency in GCC under the GCC Council also. Thank you.
Okay, that's interesting. We'll come to that in a second. And no, here, this gentleman here, I said to him. Well, no, we need to give you a microphone, sir.
Oh, sorry.
We're all very deaf on this panel.
My question is, how many global Sukuk issuance that are investment grade rated?
Okay. Does anyone know the answer to that question? No.
Either they don't have the rating or they are investment grade rated.
Or investment. How many are investment grade rated? How many global Sukuk issuance is investment grade rated?
Where? In the Kingdom?
In the Kingdom?
Global wise?
Most of the Sukuks.
Yeah, microphone, please.
I presume that the vast majority are investment grade.
I believe it's only 33 Sukuks that are investment grade rated globally.
Including Malaysian?
Globally.
Well, if you're talking on a global grading scale, because if you include the RAM in Malaysia,
that's right.
You're not comparing apples and apples, though.
Well,
yeah.
But I mean, the investment grade Sukuks today are so little.
Yeah.
I'm just wondering that this is a very important issue if you want to develop the Sukuk market. And I am sure that if you look at the numbers, and I've done the numbers, and I asked, there are only 33 Sukuks that are investment grades.
Yeah. Well, but I think as a proxy, though, you could, if you look at the vast volume of unrated successful Sukuks in the Kingdom, they've all been successful because the banks have taken a view, rightly, that they would be of investment grade equivalence. So from a sheer volume point of view, that would transform the equation.
But the potential is huge.
Yes.
In this area, if you obviously serious to develop this market.
Yeah.
Thank you.
Yes.
Thank you.
Yeah.
Mohammed.
There's also
please, and then
there's also
yes,
a factor of who the issuers are in this market. So if you look at Sukuk issuers, they're not issued by the typical AAA rated sovereigns. They're issued by emerging market and the Middle East. So if you look at the rating and then look at that in the context, most of the Sukuks which are issued internationally are issued by issuers who fall into the investment grade bucket.
Yeah, so did you want to say something?
Well, just to put some remarks on the investment grade Sukuk, because we don't have many companies that are rated sufficiently, the market is really lacking liquidity. And the secondary market is almost dry. You have Sukuks, number of companies that you can't even compare the risk, and it's driven by demand, and the premium that the investor is paid is peanuts, and it absolutely doesn't reflect the risk on these companies. Plus, you can't go to the banks and repo those sukuk, so the repo market is almost dead. You can't swap them because there is no active and liquid yield curve, and it's a necessity. It's a must to have a credit rating in order to entice the market and put it in the right track.
Okay, gentleman here. Oh, number one, yep. Yep.
Thank you. I was a bit worried. The direction of the discussion was more of whether you are pro or against the rating, local, international. I was expecting possibly that the development, the volume, the direction, the nature of sukuk and debt markets globally or regionally would have been what would dominate the discussion. I share the view by Iftikhar Ali that these rating agencies, international, local, are not mutually exclusive. They could both benefit, the local could benefit from the international and vice versa. And so the investors would sometimes require more of local if given the uniqueness, the nature, the feature of maybe the sukuk, the other locally based sources of funds that are very unique to a particular environment. So we cannot divulge completely the local ratings, in as much as also the international ratings are important. So that's what makes them mutually beneficial or mutually non-exclusive. But I was hoping that the discussion would be more on the nature, the trends, the direction.
Well, why don't you ask a question on that?
Yeah, the question?
Yeah, well, you were hoping it would be more about the trends. So ask a question about the trends and we'll try and answer it for you.
Maybe possibly the trends in Malaysia, the nature, the also volumes of issuance in Saudi Arabia and other parts of MENA and so on.
Okay.
Yes. Thank you.
We'll come back to you in a second, sir. Iftikhar, I'm going to come to you and then Khalid. What can be done to increase the volume of issuance? We know, and Yasser has just said, that from the buy side, the demand is there. People want these assets. That's part of the problem with the liquidity because everyone buys and holds. We talked about sovereign issuance, but what else can be done to increase issuance volume?
Sure. When you're looking at any market, there are obviously the buy side and the sell side, and then you have the regulator or the intermediary sitting in the middle, and you have to work on all aspects of the market to really kickstart it. There's not one particular thing that you can do to change this. Obviously, there are certain things which can be done in the short term, like relaxation on the regulations. Right now, we'll just restrict it to the kingdom here because we're sitting here. In terms of Saudi Arabia, I think the regulations for equity and debt are very similar, and that need to diverge. You have to look at, the regulator has to consider debt issuances in a different space as compared to equity issuances. And then you have certain laws, regulations which have been there in place for a number of years, which basically prohibit issuers to go out to the market. And one example I'll quote is which we as practitioners always get stuck with issuers is companies in Saudi are not allowed to issue more debt than their equity outstanding. And that becomes a big drag because once you convince a borrower to go out to the capital markets and tell him that you cannot issue more than your equity, it just becomes unattractive for him because he says, I can do it once or maybe twice, and then I hit my equity ceiling and that's it. And this law has been there in the MOCI regulations for a long time, and I think CMA is looking at it, how can this can be avoided. So these are small things which can be done in the short term to avoid this. Ratings are a key for any market, whether you talk about global, local, whatever that is. But rating is a key for secondary market to emerge, for investors to be more comfortable, for funds to be more comfortable. And obviously rating, one is obviously rating scale and rating agency. And the second part is acceptability of that rating by the regulators, so your central bank or whatever. Because your liquidity pool is there, you are right. But that liquidity pool is sitting with a few banks right now, and they are the major investors in that. And what Khalid said was pertinent, that Khalid can directly go to those banks and borrow money. Why he needs to create a sukuk and go through this whole hassle of bringing it to the market. So there are multiple things which need to be done on all sides. And I think issuers will come to the market as long as there's a simple procedure to issue to the market, and they achieve some diversification as well as what Al-Marai was saying in terms of tenor and pricing as well.
Okay. So that was the fastest overview of debt market development I've ever seen. Thank you very much. Khalid, you were nodding your head there. Do you think that some of the legal and regulatory structures need to change in order to unleash the animal spirits of the debt markets?
I think the trick comes to more efficient secondary market. If we do have more efficient secondary market, then you will have a deeper bonds and sukuk market. And the supply side, I think the more we issue, the more issuance is happening, and the more straightforward those issuances are, I think is going to help the market. By growing the supply side, I think the demand side will grow automatically, and then you will get more pension funds, more mutual funds are allowed to invest in bonds. Those are, I think, the quick fix, I think, that can be done for the bond and sukuk market that I think can enhance this market. But more importantly is education. People in this country knows stocks very well. Very few know about bonds. All those institutions, including CMA, has done a great job in education of what the stock is. But in terms of bond and sukuk, I think there is a lack of education for the public, and let alone that we just hear from the chairman of the CMA that 80 to 90% of the stock traded in the kingdom are by individuals. So unless you educate these people about what bond is, what sukuk is, which is more complicated than a direct stock, is going to make a difference. Secondly, having a Sharia compliance is very important. People will consider, and they will ask that question whether that structure is really Sharia compliant or not. And I think if those two issues are addressed at the level of the public, is going to help the bond market and sukuk market big time.
Good answers. Yasser, you were looking like you wanted to come in again.
Well, so far, we don't have a complete bankruptcy law. And I have no clue, I don't see this working without have this essential law in place. So that's a very essential thing to have in place. On the other side, the mortgage law will help the service, but that will promote the sukuk that are linked to mortgage. But with corporate, the bankruptcy law absence is a huge risk for investors and international investors. We have witnessed a case with Al-Mutakamila, for instance, where it's going under liquidation and receivership. And so far, we're going into limbo, and it will drag us for like 6 months to figure out how much we'll pay the investors, or the shareholders, sorry. So that's, I think, the number one issue, obstacle, headwind facing the corporate bonds and sukuk.
Stuart, what do you think?
Well, I think that it's been discussed in various forms over the last 2 days, but a critical factor. What are the CMA is busy with an agenda, but it's not just about the CMA. It requires multiple stakeholders as we see it. We have regular investor relations dialogue. I mean, the insurance community is very important in the kingdom. They're left out of the equation completely. Insurance companies cannot invest in unrated securities. So you've got a very important investor group there which cannot buy unrated sukuk. A lot of the asset managers can buy some, but not as much as they would if there were a greater rated component. I mean, but from our point of view, I guess one of the biggest levers lies with SAMA. The banks under their supervision are the biggest holder of sukuk on a buy and hold basis. And so it's going to be interesting to see as they implement Basel III, are there any measures they can design to encourage the banks to, if you like, put more of that paper into a market, and the role that SAMA plays in terms of a wider repo function, because at the end of the day, the building of a yield curve over a period of time as an important monetary tool for the kingdom across a wide sort of policymaker government group.
I'm under huge pressure to wrap things up, but I did promise this gentleman here that we'd have a question. I think we make that the final question.
Thank you, Abbas Hijazi, Uthaym Holding. We look as a corporate to issue the sukuk because we think the banks cannot come to terms with us on the tenure or the rates. We think the banks here are extremely conservative on the real estate industry specifically, and they do not segment it into income generating versus development. So all banks would look at a very stringent rules. That's why we would go to sukuk. Sukuk investors tend to understand and more diversified in terms of their appetite for longer tenures, lower rates, and secured or unsecured. Saudi Arabia, compared to smaller markets in the region, has a shallower sukuk or bond market. Kuwait, for instance, on equity side is 30% of Saudi market. On the bond issuance and the sukuk issuance, it's more than Saudi Arabia. And that's because the corporates are leading it, not the quasi-government, not the banks, but the corporates. And the corporates in Saudi, as per my understanding, are very strong, but very private. So I think you are seeing a tipping point in the kingdom this year and the next, where you will see corporates going into the sukuk. Today you have 3 corporates, Savola, Mara'i, Bin Laden, and Ulayyan, who has issued sukuk. The rest are quasi-government, or the rest is banks. You will see a tipping point. The banks are not competing enough. Thank you.
Okay, well, that's a nice statement on which to end. I'm sorry, we absolutely have to finish. I've delayed the coffee break by far too much. We have a schedule to hit. After the coffee break, which will be for 20 minutes only, in here, my colleague Christopher, you'll be pleased it's not me, will be interviewing the Director for Debt Management and Head of JGBs from the Japanese Ministry of Finance. But please thank my panel for their contributions, and thank you for your questions.